Welcome back to Hot Stocks. So we're looking into our smart trade, and Mark, you are a little risk averse at this point, aren't you?
Yeah, no, look, obviously we've taken, just in terms of the domestic market, we took out the highs on a spike last week revolving around data flows, etc. Since then we've had a bit of a dip down. The market moving into the kind of down dip was showing characteristics of being kind of overstretched as such. And now we're beginning to see positive, the plenary was a very negative headline, but positive boosts offshore in terms of the way Yellen was received. Lots of markets going up, and yet our market still seems to have lost the pop that it had previously, to put it in kind of broad terms.
Well, this isn't going to sit very well with you, is it?
Now, I'm highly risk tolerant as opposed to risk averse. You know, I don't know. I mean, obviously our mining stocks were all a bit lower, and that's an important part of our segment. We've got some of the consumer retail stories looking a bit floppy. And then we had MTN. And so basically, I just think we had a couple of sector leaders. Naspers also took a bit of a wobble during the week. But then in the last half of the week, everything seemed to rebound. So I don't know.
So you think he's being worried?
He's
being a little too conservative, worried about nothing?
Look, we did do a fair amount of selling in our portfolio, which we'll see in a little while, but mostly of secondary positions, which are not really high conviction trades. But overall, I don't know. I'm still with Santa. I think we're having a strong.
Mark, you don't think Santa's coming?
No, look.
Because
at the
yesterday
moment,
Paul was telling me that the little sleigh was getting ready and the gnomes were packing it up.
Yeah, no, I think the gnomes might have disappeared up the chimney the other day, quite frankly. No, the market, the characteristics of what's been trading in the market has shifted quite a lot. As the market kind of progressed, the number of stocks that was taking it up became smaller and smaller and smaller. Now the market has come down. A lot of the momentum stocks have started to lose their momentum, quite frankly. And the market is taking on a different characteristic in terms of the stocks which are holding it and supporting it. The only reason over the last couple of days that the market has actually stayed at a reasonable level is because there was a good rally in Naspers and one or two other stocks. So we're becoming more and more dependent on a smaller and smaller number of stocks to sustain the kind of current levels that the market is experiencing. And this becomes hugely problematic in terms of seeing where further strength can come from, given the fact that the factors that have been driving the market are now coming off. I mean, we had a weak rand which took the market up. We've now got a firmer rand. There's a whole bunch of issues which should be supporting the market and leading it in the same manner as the other markets, and my concern is that's not happening.
And I think maybe, Paul, a lot of the people who follow you on Hot Stocks are thinking, we've gone 12 months, we did a fabulous return to that 12-month cutoff at 164. We subsequently lost about 10,000. I don't know what happened. I'm worried about what number you're going to reveal to me later. But perhaps it's worth just discussing this in terms of any thoughts about what we're going to do, or are we not ready to have that conversation yet? Because I think people are asking.
I don't worry too much about the overall level of the market, oddly, because I don't know. I think our market is a bit of a strange beast given the stocks that are well capitalized in it. This show leads us towards specific stock opportunities. So I always look at the positions we're in and I say, do I like this one? Do I feel it's got grounds for moving higher or lower? If I'm feeling like it's not doing well, then we'll exit it, even if it's made us a profit or a loss. You know, what has happened in the past is a sunk cost. It's not really relevant. So I'm constantly looking at what we're exposed to, and if I feel there's a story or a catalyst, then I'm in. My overall macro perspective remains pretty positive. So I, again, don't worry too much about overall levels. I'm looking at trends in global GDP. I'm looking at trends in terms of market sentiment, economic revival, the sense of progress in terms of institutional and other factors.
Right, so he's generally not very worried about anything.
No, look, just to quantify my opinion as such. Look, I believe that the secular bull market remains intact. For all the arguments that Paul gave, we're simply awash with too much cash and the taps are not going to be turned off. It's just in terms of a short kind of interim period. I think the market, we anticipated volatility around FOMC and we got it. And I think that trend is going to continue now. We're going to see a more volatile phase in the markets. The second factor is I strongly agree with Paul's logic in terms of picking and choosing and selecting counters which are the best positioned ones. So that gives one a very, very large degree of protection.
Which goes back to what the discussion around Aspen that we had earlier.
I mean, if you're going to be long a stock in a high market, then you want to be long stocks like that given the fundamental backplay. But I think we're in for an interesting pre-Christmas market.
All right, well, you know we like to put our money where our mouth is. What's Paul's money? So let's check in on how our trades have done and what we've logged this week. Don't stand next to me, I bite. All right, so tell us what's going on here, Mr.
Okay,
Turan.
so the overall picture, just to put you out of your misery, is 158,766.
Oh, we've clawed back some ground.
Exactly. So at some point during the week, around Wednesday night, we were down, I didn't even tell you this, I'll tell you now, around 152.5.
I would
So
have
we
not
went
slept
all
that
the way
evening, so
down
thanks
and
for
all the
not
way back
telling
up
me.
again. And what that has to do with, of course, has been a combination of movements. But let's talk for a moment about what we closed this week, because I indicated to you.
All right, so
they're
there
basically,
it is, it's on the screen.
there are 5 positions. Astral, which we'd been in on a brief bounce because of the chicken tariffs, made a good gain there. Coronation Fund Managers. Let me tell you, you can never lose money owning that thing. But what you make, in my opinion, you should take, because it's a bit of a pro-cyclical operation. For Sheeny, we kicked out with a regrettable loss. It was looking pretty good, but with the sort of tumble, it had bad earnings or unexpectedly soft earnings. Conversely, however, we made a nice gain on Invicta. I mentioned that earlier. And then Murray and Roberts was, remember, Rob Towell's idea that it had a trading update and things are looking up in that sector, but it wasn't working. It had had a pop. We'd gotten in late, so I chossed that out as well.
But we made money on it.
No,
Or not, we
on the
lost.
Murray and
Oh,
Roberts,
sorry,
a
we
marginal
lost.
loss. Yeah.
Oh, and that's Rob Towell's fault.
So as I say, no, that's not fair. Anyway, there are 5 positions, and none of them are really what I would describe as core holdings. They were all more, stocks that arose from shows where we discussed a secondary sector, not something that I would necessarily have a high degree of conviction in. Although, all of them good companies, otherwise I wouldn't have been selected in the first place.
I'm happy to begin the week with 158,000. I have to say I'm feeling much better and more confident in your ability. And I'm glad you didn't tell me about the 152,000. All right, so what are we looking at next?
Okay, move on. So let's look at what's currently open, and these are our major positions, sorted by our profits and losses. So I just want to thank Marcus Juster again publicly for making the Steinhoff share price go up so much. It's now just below 41 Rand a share, and we've got an 8,000 Rand gain on the Steinhoff position alone.
Right, absolutely. Thank you to that man.
And then, what stands out perhaps is we continue to make good gains in that DAX position. That's the German.
It was a very smart. We got out of the, what was it?
Overall Europe thing. And we saw this week that the GDP growth numbers came out for all the Eurozone countries, and Germany up 1.3, the French down like 0.8 or something. So clearly being in the sort of German part of Europe is the place to be.
The Germans are winning.
Again, those guys, really,
Nobody can hold them back. All right, so?
On the downside, at the bottom, the position that still continues to battle quite mightily is Discovery. Doesn't seem to have had any traction since that mid-year surprise trading update. I'm not too concerned about that.
What do you think about Discovery, Mark?
Yeah, I've been discussing with a few people during the week. It is a very hard one to kind of take down. People are a little bit disappointed. I think it may be a kind of stay away stock at the moment, as in rather wait until the dust settles, because the share is not showing any intention to return to the previous levels.
So do you think we're going to see wide selling of Discovery?
Look, it's one of the stocks I really, really like because it's in that healthcare sector, and I like their ventures in China, and I think the recovery in the UK spending around their Prudential Health business is a plus. Look, the insurers all have a
So
whole...
you're not net negative on Discovery at this point?
No. And I think if the question really, I guess, is what's the catalyst that's going to push it higher, because we've seen the June numbers and there's going to be no news flow from them unless they do some sort of a deal or something. What is interesting also is to see the size of the loss we took in Billiton in just 1 week. So it dropped nearly 1,000 Rand, and that was the one that we bought at 327, and it fell all the way back, and that's that Chinese plenum business.
So you think there's a recovery in the offing there?
Well, it has already bounced a bit because it's back at 315.80 this morning, so we'll see. I always
Nothing to get worried about.
Nothing to get worried about. And as we discussed earlier, when the opportunity arises, we'll switch out of that one into the Glencore Stratas, see what they can do for us.
Yep, and then where?
We have one more slide. This is the overall position. So this is perhaps what Mark is really alluding to. So that's where the aggregate exposures we have add up to 437,000 Rand. So we've got a portfolio with 160, roughly, or 158 in it. We've got exposure to 437,000 Rand.
You can't call 158, 766, 160, I'm afraid.
Okay, but from the maths point of view, what I'm showing you is this is the extent of the gearing in the portfolio. We've got margin over there of 49,000 Rand. So we're not as invested as we may be. I mean, we could be more invested.
Which Mark is going to celebrate.
Mark is of the view that we should have less rather than more.
Even we're really be quite aggressive now in getting out of some of these positions still.
Yeah, I think now, I think we're at least in the South African market, I think we're entering that time now. I think we actually entered that time.
Well, it's noted. He
So
said
for
it on the
example,
show.
something like Steinhoff, which has done so well and made us such good gains, you know, if we had a big market correction, we'd give all of that back because it's a kind of high beta type stock. But having said that, you know, my theory is that retail
high.
sales in Europe are going to do better.